Welcome to the Invest Like a Boss podcast.
I'm Sam Marks.
And I'm Johnny FD. We're self-made entrepreneurs who invest our own money and use modern technology to invest like a boss.
Join us each week for exclusive interviews with our network of modern investors, business owners, and multimillionaires to discover new ways to invest our hard-earned cash.
Hey guys, it's Johnny and welcome to episode 110 of the Invest Like a Boss podcast. I'm out here in Chiang Mai, Thailand. And Sam, where did you go in the last week? I have no idea where you are.
Secret place, buddy. No one can know. No one can know. No, I'm down in the beautiful, wonderful paradise of Koh Samui. Anyone that doesn't know, an island in the Gulf of Thailand. So it's on the, the east side of mainland Thailand. But it's beautiful here. It's just before high season kicks in and all the tourists flood it. So everything's well priced. The tourism's low and I'm loving it.
Wait, it's November. Isn't it monsoon season there right now?
Yeah, so I flew in through a monsoon yesterday. It was a horrible flight, as you can imagine, and everything's flooded. Everything's flooded. But it was incredible. Last night I have this private pool villa down in Lamai. Johnny, I'm sure you're familiar with where Lamai is. Mm-hmm. And I was just sitting outside of my pool villa under cover and laying down. There's like an outside hammock at my villa, and it was covered, and it was raining, and it was just the most peaceful thing you could ever imagine, just laying there in the rain and listen to the waves crash. It was amazing.
Yeah, I definitely love those islands. I'm definitely gonna go there in February, but when the sun's back out and it stops raining.
Yeah, it's odd because in northern Thailand, November's typically a very nice month, but down here, it's not there yet, and you got to wait till at least, I guess, December, January.
Yep, but it is a beautiful place, and that's a pro tip. I guess this week's travel tip is when you come to Thailand, even though it's not that big of a country, the climates change a lot versus if you're on the islands on the East Coast or the West Coast, if you're in the cities in the North or the South. So if the weather is bad in one place, it might be amazing in another.
Indeed.
So speaking of travel, this week's guest has had a pretty interesting life. I mean, I didn't start following John Thomas until this week, but you've been following him for a while, haven't you?
John Thomas was one of the very early inspirations to me and my father as well. My father's been following him for longer, but just after college, I started reading some of his newsletters that are put out by Mad Hedge Fund Trader and the Diary of Mad Hedge Fund Trader. And his newsletters are very easy to relate to. His lifestyle is incredible. I'm not going to spoil it, but you guys will hear a little bit about it on this episode of how he set up his life and how he mixes travel with business. But he's got a rich history of finance, travel, and all types of incredible things that all of us, I think, will be inspired by for sure. But yeah, I started following his stuff right after college, a very impressionable time in life, going through a lot of ups and downs, trying to find yourself. And I would be reading, his newsletters over my dad's shoulder. And here's John Thomas, the guy I'd never heard of, but he's just finished climbing the Matterhorn. And he's on the Orient Express heading through Switzerland, and he's putting out all these insights on the markets and trading and everything. And I'm like, wow, man, this guy's made it. Like this is a lifestyle that I would always have dreamed of. And, that helped me kind of create some of my big goals ahead of me. And then also got me really interested in the stock market and trading.
Well, that's really cool. I'm glad we were able to do some of that now. But I think investing wise, we're quite different. Actually, you're probably a lot closer to John Thomas's style than mine. I'm definitely more on the passive index side. So I'd be curious when you interview him, definitely ask him about that. But I'm excited to listen to what he has to say because he's definitely a smart guy. He's done a lot of cool things. Oh
yeah, absolutely. So just a little background for anyone who's not familiar with John Thomas. He served in 2 different wars in special ops as a pilot. He worked for the Financial Times and The Economist in Japan and China, covering the war and also revolution in China, and then went on to create a hedge fund, sold a hedge fund, and as so many business people do, ended up getting back into business and now runs Mad Hedge Fund Trader. And basically his style of investing is active. We'll go into a lot more of this, I'm sure, in the episode coming up, but I think you guys are going to like what he has to say. It's really cool how he set up his new business, and it's very cool how he lives his lifestyle, very active, balancing lifestyle and finance, and still very hungry. I think you'll see through a little bit of this episode and his history that he stayed very active, kept a lot of goals ahead of him, and is continuing to live a really, really cool life.
All right. Well, it sounds exciting. Let's take a listen, and then let's hop back on to have a chat. Here's John Thomas.
Everybody, welcome back. John Thomas, welcome to the show.
Well, thank you very much, and hello from sunny San Francisco.
Well, you've been such an inspiration to me for many years, not just in a financial sense, but also lifestyle design. And you really have a thirst for adventure and a willingness to help a lot of other people. So it's a privilege to have you on. And I've looked and followed along with your life for quite some time. And you've had some incredible chapters, serving in the military in Desert Storm. You worked in Japan and covered war and revolution in China. Of course, ran a hedge fund and now the Mad Hedge Fund Trader. You know, looking back in all the different places that you've lived, is there a particular period that kind of stands out as one of the more interesting chapters of your life?
And the best part is ahead.
That's right.
You know, as far as any individual event, it seems like every single thing I've done in my life prepared me for what I'm doing now. You know, each led to the other. Getting a science degree from UCLA got me into the stock market because I knew how to use a calculator. You know, living in Japan 10 years, opened the door for me to go into journalism. That meant writing. Then I got into the hedge fund business because I was the only person in the world who knew about Japan. And then I was able to retire at the dot-com bust. I think I missed the top by 4 months and got into the oil business. And that then set me up cash rich going into the crash, which we made another fortune on. So you're always going for the next great opportunity. You never stop moving, and you need to be hyper aggressive.
Love it. John, on this show, we talk a lot about passive income approaches, and I'm really excited today to speak in part about your active approach to continuously beating the market. And going back, can you recall the first investment or first trade that you ever made in your lifetime?
I do. I was 11 years old. I was a paper boy for the Los Angeles Herald-Examiner, and I bought a company called Gar Wood, which makes customized racing boats. And they're still a listed company, incredibly. And I made money on that, and I took the profits on that and rolled it into IBM. And this is in 1960s when IBM was trading for a tiny fraction of where it is now.
That's awesome. And I saw in your recent webinar, you're not as much a fan of IBM today as I guess you were in the 1960s.
No, IBM in 1963 was like Apple is today. It was dominant. Everyone had to own it. Looked like it had a great future. And it's just, what they teach you at Morgan Stanley is today's AAA credit is tomorrow's triple C. If you look back 100 years at the Dow average, not a single member of the Dow average from 100 years ago is in there today. I mean, the last one to go was General Electric. It left about 2 years ago.
Well, John, how come so many active managers fail to beat the market when you've been able to do it so consistently year in, year out? Is there kind of a common error that they all, as a group, seem to make?
There are lots of common errors. For a start, they take out huge management fees and expenses. So that eats up about 5% of their capital right there. They may disclose a 1.25% commission, but they're actually taking out a lot more in, audit fees and so on. They even used to bill the funds for strip clubs, but I don't think that's allowed anymore. But they were definitely doing that in the 70s and 80s. The other thing is that, they have a herd mentality. Everybody wants to be doing the safe thing. So everyone buys the same stocks. And that's essentially a guarantee for what's not going to work. If you're always with the herd, you're always going to underperform. So those are two major reasons right there.
Makes a lot of sense. And speaking of beating the market and performance, can you clue us into the trade alerts or the performance of the Mad Hedge Fund Trader since as far back as you guys have been tracking. I think it goes back almost a decade now.
Yeah, we have a record that goes back 11 years. We have averaged 34.8% per year. This year, we are up 33%, with the Dow average up exactly 0. And last year, we hit 40. The year before that, we were at 58%. So we always try to deliver absolute returns, whether the market goes up, down, or sideways. And we actually make more money in falling markets than we do rising ones.
I think for a lot of listeners, it's hard to grasp what the magnitude of 35% compounding annually is, and also how to actually achieve that, and the simplicity of that. But what the message was really driven home to me when I attended your luncheon in Atlanta and was speaking to one of your, I think it was the longest subscriber. I forget her name, fails me, and she had made, I think, 35 or 40 times return on her initial capital just by following the trade alerts. And it was really
she turned $50,000 into $2 million, and that works out to a return of 40 times in 10 years. And at one point, she was making so much money, her husband wouldn't let her out of her office. He brought in her meals. He said, keep trading. When they first found the service, they took an initial account of 5,000 and turned it to 185,000 in 3 weeks. And then she was just doing futures outright. And a lot of futures traders will key off our market timing and deliver spectacular returns. Every year we get one or two, who brings in 1,000% return.
That's incredible. Yeah, and I
last year, only traded the yen. He used me for the market timing, and he made 1,000% return. He turned $500,000 into $5 million, and then he retired.
Oh my gosh,
guy's like 54. He retired to coach his son's hockey team. He lived in Canada, and he bought a brand new Tesla Model X P100D, and for cash, which in Canada is like $200,000, and then coached his son hockey team. It was a great way to end a career.
That's incredible. Good for him and good for you as well. And all these strategies that you're implementing to come up with the trade alerts and to trigger the trade alerts, are these the same type of strategies that you've been using for the last couple of decades, or is there anything?
The last 5 decades. But it's evolved over 5 decades, because different instruments become available. We didn't really have individual equity options in the 70s. The SPY came along, I believe, in the 80s. So you have to keep evolving your strategies to take advantage of the instruments that come out. Whenever a new instrument does come out, usually you make a fortune off of it because it takes a long time for other people to figure it out.
Right. Very cool. Now, with someone that might have relatively little investing experience, especially trading experience like myself, what would the learning curve be in following these trade alerts that you send out?
Well, we always tell people to start trading on paper. Don't do the trade alert using real money. Use your online trading account model trading platform. And if you can get the trade alerts to work on paper, then you graduate to real money, but you only do one share, one contract. When you're making money on that, then you ramp it up to 2, 3, or 4, and pretty soon you'll be doing 1,000 contracts a trade like I do.
I love the story of how your customer was the lady. She was making so much money that her husband wouldn't let her leave the office. And I was just having this conversation with my girlfriend who's looking for new work, and I couldn't help but think that maybe that would be an interesting setup and an interesting lifestyle design. And I think the beauty of your system is that you can make it available for just about anybody. It doesn't have to be an executive with a lot of experience. It can be somebody relatively new. And if they use this paper-based model first to get into the system and kind of get it all working, then they can graduate into real money. And I think that's a really solid approach.
Yeah, what most beginners do is they use real money to start. They take huge positions. it goes a little bit against them. They bail out, they lose money, they get discouraged, and they give up. Whereas the exact opposite approach is much more productive if you're interested in building a career. We have followers in 137 countries, and we have several hundred who only watch our trade alert service, and that's their full-time living. That's all they do. They'll trade, 6 or 7 months a year and take the rest off and sit on the beach somewhere in Thailand or someplace like that.
That's where I am.
Yeah. Well, then you know how nice it is.
Yeah, absolutely.
At least you don't have people shooting at you like they did when I was there 45 years ago.
Oh gosh, that was nothing military related, was it?
It was. I was flying for the CIA out of Utapao.
Oh,
which I don't think is there anymore. It used to be a giant American air base right on the Cambodian border. And it's where the CIA ran all the missions out of for Cambodia and Laos.
Oh, wow. I didn't know you served in that as well, but thanks again for your service. But always finding new interesting tidbits of information about you, John. It's wonderful. So if we go back into the trading stuff, like let's say you start with an account of say $100,000, how would you break that into, how would you know how much of that to allocate into each trade in a smart way? Well,
we run a model portfolio of $100,000. We break it up into $10,000 lots. And, when we're not so confident about the market, we'll only have 1 or 2 positions worth $10,000 or $20,000. When we get highly confident, which we just so happen to be on October 27th, we go 100% long. When we expect a very quick, rapid, short-term pop in the market, and that's exactly what we did. And after October 27th, the value of our portfolio rose 12% in 2 days.
Wow.
So we actually ended up being profitable for October when the entire rest of the industry got slaughtered. And we're already up another 3% in November.
And the concept kind of being that 90% of your trades win or make money in a sense. So that if you break it into 10 slices, like if you brought it into 2 slices and you had one of those lose, then that obviously is really detrimental to your account, right? But if you break it into basically 10 slices, you have enough diversification.
Not really. If you stop out quickly, you can limit your losses to 1 or 2%. So if the winners, make 2% each, the losers lose 2%, you can play a 90-10 game all day long, and you're just way, way ahead of the game. Occasionally, there's an extreme market event, there's a giant down opening, your stop losses can't get done, maybe you lose 3 or 4%. That happens about once a year. But overall, the math is overwhelmingly in your favor. And let me tell you, they're idiots who are doing the strategy who know nothing about markets, picking their names by throwing darts at a dartboard. And if you stop out of your losses quickly and run your longs, you'll make money. And that's basically how most of Wall Street works. Although instead of a 50-50 success ratio, which is typical on Wall Street, which is equal to a coin toss, we're up in the 90-10 level.
And John, do you have a favorite trading platform to use to execute these trades, whether it be E-Trade or Interactive Brokers or something else?
I'm using Interactive Brokers. They have a great options trading platform. They have model portfolios. They have training. But pretty much they're all the same now. They're all based off the same computer platforms, with automatic execution in the markets and so on. So there's really little difference between the major platforms. You just have to pick the one that you feel the most comfortable with.
And in your success, would you say that it's more based on an information advantage or an analytical advantage or something entirely different?
It's really all of the above. You have to use all the tricks at hand to continuously make money in this market. We use fundamental analysis, technical analysis, and watching the markets for 50 years, nothing new ever happens. You just have to decide, are we repeating 1978 again or 1986 or 1994? You have to just figure out which cycle repeat we're in, then you know exactly what's going to happen next.
We've had some big bears on this podcast in the past couple of years, and I know that you're bullish on the market long term for sure. And it's great and refreshing to hear that, especially as a young investor. We like to think of...
Oh, we see Dow 120,000 by 2030. And people at your age, you're about to enter the golden age of investment. Anything you touch in 2020 is going to go up 10 times by 2030, and everyone's going to think you're an investment genius. I know, because I've been through two of those cycles. Yeah. Anything you touched in the 80s made you look like a genius. Anything in the 90s, you look like a bigger genius because you were buying technology stocks. And I look like a genius in the 80s because I was buying Japanese stocks. Right. Wait long enough, everybody becomes a genius.
There you go. Obviously, population growth is one of the factors that are common in both those decades and through the 2020s. What are some of the other major driving forces that you see pushing the Dow to that high by 2030?
Well, the big things are the millennials become big spenders. They enter their peak spending years, which are 40 to 45. But also the rate of technology improvement is roughly 10 times what it was in the 90s. We just see, we run a technology service, and we just see so many opportunities where the potential is exponential demand in the 2020s. You almost can't count them all. Imagine cancer being cured. Imagine quantum computers computing at 1 trillion times faster than today's computers. Imagine the possibilities there. I've seen the Google operating system that they're not going to roll out for 5 more years, and that's incredible. So the future is about to get extremely exciting. All we have to do is get through one more recession next year and in 2020, and then we'll be off to the races.
And as an active trader that's continuously beat the market, what are your thoughts on passive investing via indexes? And is there a type of person that you ever recommend that for?
Well, we're about to leave the golden age of passive investing and enter the golden age of active investing. When someone parks their money in an index fund, leaves it there for a year, and makes more money than hedge funds who invest millions in research, that situation isn't going to continue for very long. Partly that was the result of quantitative easing, which expanded the global money supply for 10 years. Well, that's ending. And part of it's because we've had a raging bull market for 10 years where, picking stocks was like shooting fish in a barrel. Well, that's about to end. So people are about to have a harsh awakening on the passive investing front.
50 years of investing experience. We have a lot of younger listeners on this podcast, a lot of millennial investors getting started, getting their feet wet and their foundation for a long investing career. Are there just a couple of principles that you have that you would always pass along to anyone who asked, and just in terms of general investing principles? Yeah,
stay humble. The markets are always smarter than you. When people get stubborn, that's when they lose a lot of money. Mm-hmm. Bail out of losers quickly. It's easier to dig out of a small hole than a big hole. And I tell my staff every day, it's work in, profit out. The more work you put into this, learning a new skill, learning the markets, reading research, the more money you'll take out of it. That applies to a basic beginner. It applies to me today. I do 12 to 15 hours of research a day because I absolutely love it. I'm always looking for that last thing which I don't know.
Very cool, John. And I know that just through your career and also through your lifestyle, you've traveled probably countless countries. How important do you think travel has been in your financial success? Do you think you could have been as successful if you had been kind of in a single location, more like Buffett in Omaha?
Well, Buffett is successful because of when he started. In 1942, the U.S. had just won the Battle of Midway, but it was top secret. And that's exactly when he started investing in stocks. So when you start with a Dow average of 80, which is when Warren Buffett started, you have a much bigger success chance than someone starting when it's 25,000. But also Buffett had a discipline which he still honors to this day. Only sticking with value stocks, only buying large cash flows and dividends. And by the way, he had great teachers. I mean, Graham and Dodd wrote the book on value investing, and he worked for them directly. in New York when he was at Columbia University.
Mm-hmm.
By the way, he's a subscriber to our letter. He has been since the very beginning, 11 years ago.
And in your travels, have you found that that's helped your information and analytics, internal analytics?
You know, you really learn that going to a place and seeing things up front with your own eyes, you reach completely different conclusions than if you just read about it, you know, on the internet
Mm-hmm.
or hear about it secondhand. You know, nothing beats on the ground research. And I've been doing that my whole life. I can't tell you how many of times I went to a place with a preconceived impression and turned out to be totally wrong.
Right.
And that's the news business. That's, you know, where you find the investment opportunities. You know, when the market has stuff wrong and you've done the research to show what the right answer is, that's where the big money is made. I mean, I spent a ton of time with Tesla 10 years ago going into their IPO, and I knew this was the real deal. I knew the engineering made sense, the demand was there. We got into the stock at $16.50.
Oh my
and
gosh.
Then it hit 190. And, you know, we have a whole bunch of stories like that. You know, 10 years ago, no one would touch a Chinese internet company, you know, with a 10-foot pole. So we bought Baidu at $12 and it went to $250. And I can tell you countless stories like that.
Love it. And Tesla, off in a tangent, you're long Tesla. You believe it'll become the world's biggest car company in the future?
I think it goes 10 times higher than here. I think, you know, there'll be a $1 trillion company in 10 years. Half of that will be cars. Half of that will be their solar and battery businesses. And they'll be the world's largest car company. And they'll be selling, you know, entry-level model electric cars for $20,000. And GM or Ford won't even be able to get close to that. You know, nor will Daimler-Benz or BMW or Toyota. They're just so far ahead in the technology. No one will ever be able to catch up.
I look forward to that day.
By the way, I'm on my third Tesla. Now.
Yeah, and you're living proof of the safety of those things as well.
I know. I totaled two of them.
Incredible. So we'll share a photo of that. I think is in one of either your webinar or one of your recent newsletters, but we'll share a photo of that for the listeners. They can see it's pretty incredible.
Yeah, I have to tell you, insurance companies fail to see the humor in you totaling a $150,000 car, let alone doing it twice. So I tend to change insurance companies often. Basically, insurance companies hate me. I've also totaled 3 airplanes, so I tend to shop around a lot.
The listeners want to know when you're going to be raffling off a trip up in one of the Spitfires over England.
Well, I don't have to raffle it off. You can rent these guys for $5,000 an hour. Just Google rental Spitfire White Cliffs of Dover, and the site will pop up. They have a 2-seat Spitfire trainer, which I'm going up in next summer.
But John, we want to go up with you flying the plane.
I'm not sure they would allow that. People with these $2 million vintage airplanes are pretty particular on who they let fly them. So you can only go up with a co-pilot.
Got it.
If you want to go up on your own, you have to buy it. And a functioning Spitfire these days is around $2.5 million.
Oh my, wow. What a privilege. Well, just a couple questions to wrap up the episode. Just interested in the lifestyle design, because I think the way that you have it set up is so admirable.
Perfect. It's the perfect word you're looking for.
Yeah, we've done a dedicated episode on this because, millennials, for better or worse, have more choice probably now than in any era in terms of how they set up their life, where they work, where they live. And I think a lot of people are, as exciting as it is, it's a lot of navigating. But the way that you have it set up right now is part-time in San Francisco, part-time in Tahoe, I believe the winters, and part-time in Switzerland. It's hard to come up with 3 better than that. Did you kind of fall into that, or was that more by design or more of a lifetime goal?
I've been traveling for 50 years, and these are my favorite places in the world. I have a chalet in Switzerland with a spectacular view of the Matterhorn. I usually climb the Matterhorn once a year. When I'm not, I'm doing climbing local mountains and doing at least 5,000 vertical feet a day when I'm there. Tahoe, I hike the Tahoe Rim Trail all winter. I do it with snowshoes. I snowshoe maybe 600 miles a year with a 60-pound pack. It's my healthcare plan. It helps me live forever. And here in San Francisco, I'm right next to Grizzly Peak. I do 10 miles a night over there. So I always get my best trading ideas hiking uphill with a heavy pack.
That's incredible. Both those things, hiking the Matterhorn and snowshoeing around Lake Tahoe, both on my bucket list. And the Matterhorn is just a single day hike, isn't it? You have to summit in a day.
It is. You start at 2 a.m. and you get to the top at about 6, and then you're down by noon.
Pretty incredible. Well, John, you're an inspiration to all of us, both the financial success, your service, and your lifestyle design. I can't think of someone that's more complete in those areas. And I'm very thankful for you coming on the show and speaking to us about some of the wisdom and experience that you've gained over your career and helping us to take a look at an active approach to beating the market. And I just want to thank you again for your time.
Yeah, if you want to get our research for free, just go to our website at www.madhedgefundtrader.com, and there'll be a little free research sign up there. That'll get you on our list and get you invitations to emergency strategy webinars. We just had one last week that got basically our entire customer base into the market at the absolute low of the year at the meltdown bottom.
Good stuff. Well, we look forward to taking a look at it and hopefully raking in those profits. John, thanks again. We'll catch you next time.
Okay, great to talk to you.
I can definitely see Sam in one of these fighter jets. Please do not go rent one to fly one.
I don't want to fly one. I want to go with him. I want to be in the back. That would be so sick. So sick. One of those Spitfires.
Yeah, I can imagine you with your selfie stick in the Spitfire. If you guys haven't seen it, we'll put a photo in the show notes. They're these like old school fighter planes. They look really cool.
We'll have to get a photo from John because I know he's got a lot of photos of him in them. But those Spitfires were the World War II planes. I believe this is right. That they were the World War II plane that the Allies used, specifically the English, and the Germans were kind of always one step ahead of the Allies with their war technology. But when the English got this kind of new engine that they put in the Spitfire, and then the Spitfire was kind of ahead of the Germans, and it really kind of changed the battle in the air in World War II.
All right, well, that's exciting. Not as exciting as those 35% returns he's been getting, though.
Damn. You know what 35% looks like compounded over the course of 10 years? It's crazy, right?
It really is insane. Like it's unfathomable because it just doesn't happen normally.
Right. And so I shout out to my dad, by the way, he set up John, wherever John travels, he sets up little meetups. John, it's something you and I should probably start doing with ILAB. But John sets up meetings, kind of luncheons, where you can go and you can sit down with them, have lunch, of course, and then kind of just ask them whatever you want to do. And my dad and I have wanted to do it for several years and finally found a date to do it. So we just did it recently in Atlanta. I put up a photo of John Thomas and I at that luncheon with a tie strangling my neck I'm not used to. But I was sitting right next to a lady who, very unassuming, very nice lady. And she was one of the oldest subscribers to John's newsletter. And that's who we talked about in the episode. And she was talking about the type of money that she made just following the trades. And I was just like blown away because it's one thing to hear about the returns. And it's another thing to be with a customer that's basically just done it for the last 8 years and made a killing. So it's awesome.
Well, I just did a quick compound interest calculator. It looks like if you started with 10 grand, never put anything else in, over the last 9 years, compounding at 35% interest, you would have got that 10 grand would have turned into 148,000, which is incredible. But if you bump that up to 30 years, let's say you can keep that up somehow for 30 years, starting with 10 grand, never adding anything else in, guess how much you would have?
I don't know. Snowballing's going to come into play pretty quick.
Do you think it'll be over $1 million?
I think it'll be over 3 million.
$81 million.
Oh, man. Dang.
That is the power of compound interest, and it's insane.
And that is the power of getting started early.
Yeah, but not to play the negative Nancy, but it is really it is almost impossible to grow steadily at 35% for 30 years.
Sure, for sure. But any of those compounding interest calculations, if you take a long enough time horizon, I really feel like that the most important thing is just getting started early. If you get started with like a Roth IRA and just put it in index funds, but you get started when you're 18, like if by the time you're 60, if you assume any type of moderate interest, moderate growth, you're going to just crush it.
Yeah. And, another part of it is just, actually adding money into it. It's not realistic to start 10 grand and never put anything else into it. Just by simply putting in, another 10 grand a year, which, isn't really that difficult. Start with 10 grand, put another 10 grand a year. Even at a modest 10% interest rate, you would grow over 30 years. You would have almost $2 million, which is, plenty fine for most people.
Yeah. And that's generally just a passive approach as well, right?
Yeah. But if we were able to get 35% consistent returns, that 81 million would now be close to $400,000 million.
$400,000 million.
Yeah. And that's why I got so excited listening to his interview, but also watching his webinar and seeing, what's possible. I mean, because he's had, on the webinar, he showed some of his numbers, and for the last 9 years, he's had this great track record. But it honestly, it goes against everything that, I believe in with like steady, consistent returns, not trying to time the market, not trying to beat the market, and just investing in low-cost index funds. Like, what are your thoughts on this?
Well, I think I'm transitioning more from a entrepreneur to a full-time investor, right? So going back 4 or 5 years ago, or actually a little bit longer, 6 years ago, I was full-time entrepreneur, not investing at all. Sold the business. Then I was kind of like part-time investor, part-time entrepreneur, getting new projects started. And now I'm trying to transition fully out into generally a full-time investor. And I think as much as the whole passive approach is awesome and affords me to live the lifestyle I want to, you got to be active with something, right? So if I'm not doing my own businesses, in a sense, I need to do something a little bit more active with investing, because I'm not just going to go hiking, surfing, getting massages all day in Thailand. Like I need to do something, right? And I think doing something like this, not only would it be fun and rewarding, but you would also learn a ton about markets and investing in finance, even if you just did it for a year or two, right? You just learn so much. So I think it's really appealing. It's really interesting. And now that I'm getting some more free time, some of my projects start requiring a little bit less active time, I think something like this would be really cool to do.
Yeah, I could definitely see it being exciting. And I watched, his webinar. He definitely knows what he's talking about, and it's exciting. It's fun, and, he's a smart guy. So it's really tempting to say, you know what, let's check him out and let's see, it's basically like you're riding his wave, because I'm sure that he's investing in what he's talking about, and that's why he's so passionate about it. So obviously he's putting a lot of time and effort into it. I just don't know if that's something that I want to risk, because even though it's such a high return, it's also, I guess, I don't want to call it another job, but it kind of is, right? Because you're actively, I mean, I guess he could be researching. You can just go into the trades, but it sounds like this. Like for me, I'm all about the passive index investing, but it is exciting to hear from someone who is on the extreme other side
and just crushing it. Yeah, it's pretty awesome. And it's at one point I was like, man, well, John's got 50 years of investing experience, trading experience, and at one point I was like, is he calling like all these shots? Is he making all these trades? But then you find out like he's got a massive team of analysts behind him that's doing this stuff, right? Feeding him a lot of information. So yeah, I'm sure he's making a lot of these calls himself, but he's also getting fed a lot of information, just like a hedge fund would. And in fact, hedge funds are actually receiving a lot of their information from Tom in many cases, or from John in many cases. So it's really cool. I'll tell you what, you should definitely sign up for like the free newsletter, because it's really interesting. Like you'll you'll learn a lot. Like when I started reading these initially, I was just learning a lot about the world and travel, like the Orient Express I'd never heard of. I would, see him on it and I start researching it. He's got we did that episode with Zach a while back, talking about the perfect life setup. But dude, San Francisco, Tahoe, Switzerland split in thirds each year. That's got to be up there. That's got to be up there for most people.
Yeah, definitely. I mean, to be honest, Switzerland has never been on my radar just because it's so expensive, but maybe I should just make more money and have it not be an issue.
I'm sure you will, buddy. You've tripled your wealth since we started this podcast, so I have the utmost confidence in you.
Well, appreciate it. We'll talk more about that on the next quarterly review at the end of the year. Let's see how the markets go. But I am excited, to hear that they've been able to keep profits during the downturns, because that's actually what a hedge fund is supposed to be. I think a lot of people don't realize the literal definition of hedge fund. They originally started as a way to kind of hedge your bets against things going down. In the last, however many years, that kind of definition stopped being so literal, and people just started using as a way to kind of, I don't want to say speculate as things go up, but as a way to just kind of ride the waves going up. But it is nice knowing that it's possible to make money in downturns, and we don't have to just hold on and see what happens.
Absolutely. And speaking of, I think after our quarterly updates where you kind of threw a bone at ArtFX and said, hey, ratchet it up. I like the ups and downs, but I want higher returns. I don't know if you took a look, but they've been trading really well in the volatility, which was also awesome because in these last few weeks that we lost a lot of money in our index funds. ArtFX has been killing it. They're up like 2% last month and 2% again this month. So same type of thing, right? Make money in any type of market, and in down markets, the potential to make more money.
Yeah, that was definitely exciting. If you guys want to hear about that episode, more about ArtFX, that was episode 3. And if you guys want to know more about John Thomas and the Mad Hedge Fund Trader, go to madhedgefundtrader.com. As always, we're not financial advisors, so always take a look and do your own due diligence. But it does look like a fun thing. So check out his newsletter, subscribe to it, and talk about it in the Boss Lounge.
Absolutely. Big shout out to John for coming on the episode and sharing everything that he has. It was a lot of fun interviewing him, a lot of fun meeting up with him in Atlanta. Learned a lot over the last few years and looking forward to following his material more. Johnny, looking forward to catching up in Chiang Mai probably next week when I return.
All right. Look forward to having you. Bring me back a coconut or something.
Yeah, buddy.
Okay.
You got it.
See all of you guys next week. Bye-bye. Thanks for listening to the Invest Like a Boss podcast. Join our mailing list at investlikeaboss.com to get exclusive access to our insider investment portfolios and our private members forum.
If you enjoyed this episode, please subscribe on iTunes or your favorite podcast app. Tell your friends and leave us a review in the iTunes store. It helps more than you know. See you guys next week.